Very good afternoon to all of you. You have tuned into the newsroom on ET Now with me, Shrishti Sharma. And firstly, having a quick look at the markets. Then the markets are seen to be quite flat as of now. But the good point is that for a change, we are not seeing the declines on the benchmark indices. They are trying to hold steady just ahead of the big verdict that will be upcoming in the next week or so. But the good part, apart from that, is India VIX, which is down about 4.5% in today's trading session as of now, but it's the Adani group of counters that are really taking it on the roll. Adani Ports as well as Adani Enterprise are some of the top gainers in Nifty 50 as of now, having the gains of 2.5 to 5%, inching higher as well as at the day's highest point. Other than that, Shriram Finance, L&T and Tata Steel are some of the counters that are seen to be holding strong in today's trading session. But on the flip side, stocks like Bharti Airtel, Hero MotoCorp as well as LTI Mindtree are seen to be under pressure. What has actually changed in the last half an hour or so is actually the breadth of the market, which has actually improved in the favor of the gainers on NSE as well as on BSE. So that is another aspect that we are keenly watching out for. But definitely everyone is waiting out for the big verdict on 4th June. We will be getting the exit polls and the analysis for you all just from tomorrow. But before that, let's understand that how the market biggies are actually looking out and hoping for an election outcome. How are they placed right now in this market volatility and scenario? And to talk more on all of that, we are being joined by Vinay Jaising, MD and Co-Head and Portfolio Management Services at JM Financial. Hi Vijay, very good afternoon and thank you so much for your time. Firstly, on to the market volatility that we are seeing just ahead of the big event. What is your expectation from the election outcome? Because we are seeing a lot of these, everybody is coming out with their estimates on the market movement. So how do you see the market placed at this point in time?
So, if you look at the last two election results, you go back to 2014, NDA had about 336 votes. So you go back to 2019, NDA had 353 votes. And both the time BJP were, north of the magical 272 number. So whatever comes out, obviously Monday is going to be a very volatile day. That's the day where the counting happens and, gets completed. But everything will be a function of what percentage of votes BJP and NDA together get as compared to what they did in 2014 and 19. Having said that, a single government getting a power altogether with more than 272 votes and a stable government is what the country needs. If you were to go forward by 1 week and then start looking at the Indian markets again, where all of us will survive and seeing the way the inflows are coming in from domestic investors, they're already giving a thumbs up to a domestic stable government. So what we expect is, apart from a volatility week next week, based on where the vote number comes, if it is anywhere between 330 to 360, you'll have stability. Really, the VIX will come down. But if you have something something much lower than 330, let's say 10% lower than 330, somewhere close to 300 or sub 300 levels, you'll see the markets correct and then stabilize before it takes its next step. The steps, if I was an investor, and that's what we are doing to look forward to post the market, is who's coming in position for the finance minister, what are the directions of the budget, and more importantly, the manifestos are all out. So if the existing government comes into powers, I don't think many people will change their portfolio positions, which would be largely geared towards capex and power, which is what we are doing. We're currently totally invested. We are not keeping much cash on hand because in volatile times, especially in volatile times, and where the market mood is swinging up, you want to be fully invested.
All right, Vinay, thank you so much for your take. But one key concern is that the FIs are not getting back to India. We are seeing continuous selling pressure from that. But thanks to the DIIs and the strong mutual fund buying that we are seeing, that the markets are still holding some ground. If at all the election results come on the positive side, do you believe that could be a big mood changer for the FIIs and they can once again start looking at India, or the valuations can still keep them away?
So, a glass is half empty or a glass is half full. That's the question you're asking me. The way I would look at it is very, very simply put. DIIs have put in as much as $6.5 billion this month itself, which is amazing. Today, DIIs and non-retail India are more than 16.5%, which is more than what FIIs together constitute for India. So today FIIs are probably at a 10 to 12 year low of around 16%. At the same time, many good things have happened for the country. You've seen obviously the GDP growth happen fantastically. You've seen a 15-16% incremental growth of India contributing to that of the world. So that's again a huge positive. You've seen emerging market bond indexes being added for India. You've already seen $15 billion of foreign debt money come in the last 12 months. So things have happened for the positive. FIIs at one end, MSCI has increased the weightage from 6 to 18 in the last 10 years. That's a big jump. And a lot of it coming in the last year. At the same time, you're seeing FIIs go down. So now in my bet is, they're all underweight. And you will see this liquidity come in post a stable government coming to the picture. So I think the next 2 years to 3 years, India is going to be inundated with a lot of inflows coming in from FIIs. A simple maths, let's say we are today a $5 trillion market cap. For FIIs to go from 16 to 20, you need 4% of 5 trillion coming in. So you're looking at substantial numbers, as much as $200 billion, which they'll have to catch up on in the next year to two to come in. And that will make a big difference even to the current account deficit of the country, which could incrementally inch to positive territory. So I think lots of good happening and driven by liquidity and a stable government. And that's what our expectation is.
When they actually start coming back and start actually pouring some more water in the glass half empty instead, then which are the sectors that you believe that will have the key focus on? Because one big theme that everybody is talking about is actually the consumption space. And in the recent earnings gone by, we have seen all these FMCG players, consumer players, they have done pretty well. So two questions. Firstly, any particular spot that you find that could be lucrative for FIIs as per se, as well as what's your take on the consumption theme specifically?
Sure. So, if you take the BJP manifesto and start finding words, which have been repeated multiple times in the manifesto, you'll see the word defense, you'll see the word capex, you'll see the word water, you'll see the word power come multifold time. You'll see them come as much as, one of the words I mentioned, capex, coming as much as 59 times. So clearly the direction is let's invest and keep on increasing the capex cycle of the country so that we get jobs, so that we get a Make in India story. So I think that's the segment I would say where you will see maximum inflows coming. Now, hasn't that happened? Though we are saying FIIs are net sellers of the market this month and last, if you start looking at it a lot more micro point of view, you'll start seeing the inflows also have been coming into capex, into industrials, into power. So they're already doing it. They're actually getting out of the question which you mentioned second, which is they're getting out of, they're reducing their weightage in financials, they're reducing their weightage in the consumption space. So how are we poised towards the consumption space? We were very lucky last year, to back two big stars for us, which are, Trent and Varun. Obviously, they are a lot more costlier today than they were earlier. Having said that, now in the consumption space, we are looking at ideas in the tourism industry, ideas like, Sami hotels. But, we are restricting our money which we are putting into the consumption space because we're seeing the growth everywhere else being a lot more. If at all we are playing even consumption to the housing consumption play, we have names like Chola Financial, or simply put, going by the way the options market is working, you have the Bombay Stock Exchange, the BSE.
All right. Vinay, if we can talk about some of your stock-specific ideas as well, since you were just highlighting the capex theme, and I could spot one of the names, that is Kirloskar Oil Engines. How do you see this particular company driving the capex growth, as well as what's making you positive on this particular counter? If you can talk some bit with us, because we are seeing that all these Kirloskar group of companies are doing pretty well.
Sure. So thank you for this question. Rahul, our analyst, got this call smack on right. We started buying it at probably one third today's price. The reason we bought it then and the reason we want to buy it today as well is virtually the same. This is a company which is moving up the technology chain of the engines it's selling. So it's increasing the KVA. So that's step one. Second, it's getting a lot more of the manufacturing or the maintenance contracts, which virtually global MNCs were getting into that business. Third, it's now tapping in the export market. And finally, most interestingly, today they have a 4,800 crore NBFC sitting inside them called ARCA, which is largely real estate related, and that sooner than later I think will be unlocked as well. They did their first NCD in the last 6 months. So you're seeing this company, in terms of valuations, that's up 20 times on a consolidated basis, PE. Return on capital employed between 18 to 20% and inching up. And the earnings growth trajectory in the last 2 years and the next three are north of 20 to 25%. So we really like this name. DG sets are going nowhere to going up. You see the amount of power pain the country has. So Kirloskar Oil fits a lot of the bills of why we like it. Great space, make in India story, unlocking because of its NBFC getting listed as well.
All right, Vinay, thank you so much for highlighting what's making you bullish about Kirloskar Oil Engines. Definitely one such spot that the market are also finding lucrative. And thank you so much, Vinay, for joining us today on ET Now. Pleasure having you. But with